All right. Good morning, everybody. Good morning to all you magnificent melon heads out there. It is January 5th, 2024. Happy Friday, everyone. And the top story this morning is not necessarily the most important story. The top story this morning is the jobs number. It was a beat. More jobs than expected. We'll get into the nitty-gritty of it. The details, there's some pretty good things in there. The labor market remains somewhat resilient. There are some indicators that show some weakness. There are some indicators that show some strength, but we still don't have the surge of unemployment that we're expecting. The one notable thing, big drop in labor force participation rate in this report. That was unexpected. We've been seeing people drawn back into the labor force by inflation and financial hardship. We actually saw people leave the labor force last month. Is that young people giving up? Is that people who stayed in the labor force too long finally retiring? I don't know exactly what that is, but that stuck out as me. But we'll get into the nitty-gritty of the jobs report and what industries were hiring, what the other various statistics did. But by far the most important story this morning, I think way more important than that jobs number, is Zhongzhi Enterprises Group, one of the largest shadow banks in China, just filed for bankruptcy. Now, it's not a surprise that they are going bankrupt. That we talked about that a few months ago. The numbers were just ridiculous at Zhongzhi. Assets of $28 billion, liabilities of $64 billion. This company went bankrupt a long time ago. They're just finally admitting it. But the big story here is that they're going right to bankruptcy court. And that is shocking to me because we've been watching this circus, and it has been an absolute circus, the bankruptcy and the restructuring and that back and forth about Evergrande, which is this saga that's been going on for years. It has been ridiculous. Again, the writing was on the wall that was crumbling because it was made of lousy concrete with no rebar. The writing has been on that crumbling wall for a long time, and yet we're still sitting here debating, are they going to liquidate Evergrande or are they going to restructure? They pushed out that final hearing to January 29th because nobody wants Evergrande to liquidate because everybody is afraid of price discovery. We can't find out what these buildings are actually worth because then everybody else has to go reprice the assets that are on their books based on what they're actually selling for. Price discovery is a big no-no in Chinese real estate right now. Also, U.S. commercial real estate. We are discovering that these prices really suck once these buildings actually sell. Case in point, the story about Van Barton buying back their own building at auction for $28 million less than they owed on it, right? So it's happening here in the States too, but it is just epic proportions in China, obscenely inflated bubble in the Chinese construction sector. Now, Zhongzhi, we're looking at like a $36 billion shortfall here. The question there is contagion risk. Who goes belly up because of Zhongzhi? Now, this is a shadow bank. This is not a bank. It's a shadow bank, which means their business model very closely resembles banks, but they are not regulated. They don't report the data like a bank does. And so they pretty much get away with anything. And it's the Wild West of finance. And when the 3 red lines policy came out in 2020, 2019 timeframe, when the 3 red lines policy came out, which is what torpedoed the Chinese housing bubble, a lot of these local government finance vehicles, a lot of these real estate developers, they turn to these shadow banks for capital. They bought or they sold what they called wealth management products. It's not a bond. It's not a loan. It's a wealth management product. You give us your money, we manage it for you for an interest rate, and in return, we take that money and we loan it to, say, lousy real estate developers, and they try to make a return on it and pay us interest. Well, gosh, Jack, doesn't that really sound an awful lot like a bank? Yes, it does, because it essentially is a bank, but because we don't call it a bank, we don't regulate it like a bank, and they can do whatever the heck they want. And nobody really cares in China, at least not in the CCP, because it's all wealthy families' money. It's not working class individuals. Remember, social stability is key in China. They're afraid of protests and riots because, unfortunately, in the Chinese mindset, when there's a protest and a riot, the only answer is to either kill them or beat them up. It's certainly never listen to the people and adjust policy. No, silly rabbit. No, just suppress them brutally by force. And so that tends to be bad for business when you're in the government, ruling people oppressively business. So they're very worried about social stability. Well, what's happening in Zhongzhi is not a big threat to social stability because it's very few, very wealthy people. And so they're not going to bail out Zhongzhi, and they're going right to bankruptcy court. That is the surprise. No talk of restructuring, no debating with bondholders to see if they would take an 80% haircut instead of just selling the assets. Nope, straight to bankruptcy court, which means we're not even talking about it. We're already dealing with this circus at Evergrande. Just put it up for sale. That's very bad because we're talking about $28 billion in assets. I'm told about half of that is real estate assets. So that's $14 billion worth of projects that are going to hit the market that is going to suppress prices. And who does Zhongzhi owe money to? Who is the owner of that $64 billion in assets? Remember, one man's liability is another man's asset. And Zhongzhi has $64 billion in liabilities. That is $64 billion of somebody else's assets. They've only got $28 billion to cover it. That's what they are claiming they have. But when they actually sell those buildings, it's a good bet it's going to be a heck of a lot less than $28 billion. So who's losing money? And then who do they owe money to? And if they can't pay then who do they owe money to? That's contagion risk. That is the dominoes falling one after another. That's how a $30 billion bankruptcy can turn into a several $100 billion deleveraging event. We talked yesterday about how deflation in China is a very big deal. Starting salaries fell for 3 quarters in a row in China. They're not even reporting the youth unemployment anymore because it keeps going up. And again, social stability, we don't talk about it, then it's not actually happening, right? Again, very communist thing to do. So the deflation problem in China is about to get a lot worse. Western media is starting to cover the Zhongzhi bankruptcy, but that is one of the largest bankruptcies in Chinese history. It's a big one. There's going to be fallout from it. And expect to be hearing more about that in the coming months. With that, why don't we shrink my big melon of a head? Let's see what is going on in the world of finance today, because there is plenty happening this morning. Right now, we've got the S&P. It bounced around quite a bit. It's marginally negative right now. It initially took a puke when that jobs number came out. We had a big red candle down. It did recover somewhat immediately. Now it's pretty much right back to where we were when the announcement hit. The market is probably going to have to reprice a little bit less of a dovish Fed on this news. All right. If the Fed is going to cut, the Fed needs a reason to cut. And right now, the Fed doesn't have a reason to cut. Unemployment is not surging. Interest rates are high. They are oppressive. They are hurting people's finances. But at the end of the day, the unemployment rate is still historically low. And so inflation remains double their target. Inflation, at least on paper, is the bigger problem right now than unemployment. And so the Fed can't cut yet, or at least they're going to have to manufacture a different reason to cut, or at least change the BS story that they're feeding people, because the jobs numbers are not reflecting the lagging damage that those rate hikes have done to the economy. I think eventually they will, and I think it's going to happen very suddenly, and by then it'll be too late. But at least for now, the market's going to have to reprice a slightly less aggressive Fed. We've got the Dow is down 33 points, 0.09%. Again, barely lower this morning. Had a big sell-off on the report. The algorithms bought it right back, and now we are essentially unchanged. We've got the NASDAQ is down 11 points ahead of the opening bell. Looks like it's heading towards positive territory right now. People are buying the NASDAQ this morning. NASDAQ finally had a little bit of a turnaround yesterday. It has been a rough start of the year for stocks in general, though. Looking over at the commodities board, we've got February gold futures at $2,047. That's down about $2 this morning. March silver futures $23.21. That's up about 3 cents. We have got platinum and palladium plus or minus about 0.2%. Not a lot happening with the PGM metals. And West Texas Intermediate February crude oil futures at $73.79. That's up $1.59 this morning, or about 2%. More developments in the Red Sea. We'll talk about that at the end of the stream, probably driving oil prices right now, as well as the jobs report. More people working means more people consuming energy. So I'm guessing we're getting a little bit of reaction to both the banter back and forth and the attacks in the Red Sea and the slightly hotter than expected jobs number. Looking over at the DXY, with big spike in the Dixie. Again, on that initial report, the dollar surged up over 103. Came right back down. It's still in positive territory this morning, up 26 basis points at 102.68. Stocks have had a rough beginning of the year. The dollar has had a very good beginning of the year. The Dixie has been rising pretty much every day since the start of 2024. And looking over at the bond markets, we have got yields are higher across the board this morning. If I can get this pop up to close, it doesn't want to. The 30-year Treasury at 4.204%. That's up almost 7 basis points this morning. The 10-year is back above 4%. We got 4.051, up 6.5 points this morning on the news of this jobs number. The 2-year Treasury, 4.441, also up 6 basis points. And the 1 month is at 5.399, almost 5.4. That is up 2 points this morning as well. So yields are higher. Again, guys, bond yields moving higher. That means bond prices moving lower. A little bit of a sell-off in the bond market this morning. And let's talk a little bit about reverse repo watch. We had a step down of about $55 billion yesterday. That's after a very slight increase the day before that. So we are still above the trend line, but we have definitely resumed our decline after that spike at the end of December. Nothing unexpected there. We remain just above the trend, not quite on pace for this to hit zero sometime at the end of February. Going to keep an eye on this one. We'll see where we go in the afternoon. Now, let's talk about this one, guys, because this is a very big deal. Again, this story is huge. Court accepted troubled China shadow bank Zhongzhi files for bankruptcy. No talk of restructuring, no negotiating with creditors, no government investigating to try to find a workaround. Nope, right to bankruptcy court. That is a big deal here. The court accepted the case after the firm said it can't repay its debts, and Zhongzhi revealed a shortfall of $36.4 billion. That was back in November. Chinese shadow bank giant Zhongzhi Enterprise Group filed for bankruptcy, cementing the rapid downfall of a firm that oversaw more than $140 billion at its peak before succumbing to the property crisis that has wreaked havoc on the world's second largest economy. Zhongzhi said it obviously lacked the ability to repay its debts, you think? According to a statement Friday from Beijing's First Intermediate People's Court, which accepted the case, an audit found Zhongzhi's debts totaled 420 billion yuan. That's about $64.4 billion, compared with assets of 200 billion yuan, or about $28 billion. That's according to a letter to investors back in November. The downfall marks one of China's biggest ever bankruptcies, putting more stress on already fragile consumer and investor sentiment. The property slump, weak domestic demand, and sluggish trade are all weighing on the economy, while its benchmark stock index has plunged 3 years in a row. And there's a little bit of stuff here. Zhongzhi's filing is also unusual, that China's highest profile debt failures in recent years have tended to go through debt restructurings first, avoiding formal bankruptcy. HNA Group, the conglomerate that collapsed with billions in debt, completed its restructuring back in 2022. China Evergrande, whose default in 2021 accelerated the country's property debt crisis. They have some $327 billion in liabilities, but they're still struggling to avoid liquidation. That January 29th hearing is still on the docket. We'll see if they just extend and pretend again, or do they actually wind them up? That's the big one. Is Evergrande going to put all those buildings up for sale or not? Or will investors just agree to take a massive loss? Shadow banks like Zhongzhi are loosely regulated firms that pool household savings to offer loans and invest in real estate stocks and bonds and commodities. That's exactly what a bank does, but we just put the word shadow in front of it, and magic, it's not a bank. China's trust industry is a key alternative to funding source for weaker borrowers unable to get regular bank loans, such as real estate developers and local government financing vehicles. China has been cracking down on shadow banking since late 2017. Again, guys, this is probably the biggest story in the world this morning, at least financially speaking, and not getting a lot of attention. That jobs number is overshadowing it, but that is a very big deal. And we had this rather hilarious statement from the People's Bank of China today, courtesy of Breaking Market News on Twitter. They're saying we are to improve the convenience for foreign investors to participate in China's bond market. Well, isn't that great? Hey, folks, are you looking for a way to light your own money on fire and lose everything by buying a piece of securitized tofu dread construction without all the hassle? Well, I am your man. That is what the PBoC is saying right now. Again, as all of these bonds are going belly up and as the firms who own them are going bankruptcy, they're saying we are going to make it more convenient for you to buy this hot garbage. Isn't that just nice of them? Moving on to the jobs number. This was a big one, came out today. Also, the U.S. economy added 216,000 jobs in December. That is more than the downwardly revised 173,000 jobs in November and well above market forecasts of 170,000. So on the surface, bigger headline number. It's a beat, 216,000 jobs. Again, continuing the trend of a shockingly, surprisingly, note sarcasm, revised downward number from November. It was previously reported as 199,000 jobs. That is down by 26,000. Fun fact, if you subtract the $26,000 or 26,000 jobs from the downward revision, if you subtract that from the headline number of 216,000, well, then we actually got fewer jobs created this month than the initial headline report from last month. So everybody is looking at it as a big beat. But again, when you account for these downward revisions every single month, which has become the punchline of a stupid joke at this point, what a joke this financial data reporting has become, the political shenanigans around it. It is obvious that there's political reasons that these numbers are artificially inflated every month and then quietly revised after the fact. So I'm sure this 216,000 number is going to become 180 or something next month when they downwardly revise it like they do every other month. But when you account for those downwardly revisions, the numbers are still pretty good. They're not great, but they're also not terrible. It's laughable that we do this every month. Now, let's talk about the sectors where the jobs are coming in. See if you're noticing any trends here in the sectors. Employment continued to trend up in government by 52,000 jobs. Leisure and hospitality went up by 40,000 jobs. That's bartenders, waitresses, baristas. Healthcare went up by 38,000 jobs. That is the aging demographics, the aging population. Social assistance up by 21,000. Again, demographics of the population at work there, 21,000 jobs in social assistance. Now, this is interesting. 17,000 jobs added in construction. And that's interesting because my buddy Kevin, we were talking on the weekly Zoom call for my Patreon group on Wednesday, and he does custom home construction. And he mentioned that right around the middle of December, right as interest rates started to tank, or slightly after they started to tank, that his firm, where they do, again, high-end custom builds for wealthy individuals, they went from having a few months of work to being booked out for 2 years. Late in the fall, November, December timeframe, there was a huge surge in spending on new builds. And I was a little surprised to see this in this jobs report, 17,000 jobs added in construction, because all the indicators I've seen shows that the big home builders are really struggling to move inventory out there. But this number is more in line with what Kevin was saying on our Zoom call, that there is some money flowing into construction now off of these lower interest rates. So that's important. One notable decline was transportation and warehousing, lost 23,000 jobs. It's interesting to see that in December, big shopping month. Again, these numbers are seasonally adjusted, so shouldn't be seasonality playing out there. Here we go. This is looking back about a year in this chart here. Each bar represents the jobs reports, the adjusted jobs reports. Again, we got it downwardly revised 173 last month. So this number is a beat. It is hotter than expected. But if you look back over the last 12 months or so, January notwithstanding, it's pretty much in line with what we've seen all this year. So the labor market is still not showing a lot of weakness here. Let's look at the unemployment rate real quick. The unemployment rate in the U.S. held at 3.7% in December, unchanged. Again, if you're thinking the Fed is going to cut 6 times to save employment in 2024, well, there's no unemployment to save people from right now. It's only 3.7%. Now, one caveat to that, sure, unemployment didn't change, but check out what labor force participation rate did this month. That's one to keep an eye on, guys. Labor force participation rate in the U.S. decreased by 0.3 percentage points to 62.5 in December, marking the biggest drop since January of 2021. That came out of nowhere. Now, look back to all through 2023. You can see labor force participation rate. It rose early in 2023. Things were looking pretty good in January, February, March. Then we were flat after the banking crisis. Labor force participation rate just flatlined all through the summer. And then we jumped up in the fall, September, October timeframe. It looked pretty good. Now, wham, right all the way back to where we were last February. A lot of people left the labor force last month. I don't know what's going on there. Did they retire? Did they quit? Did they give up hope? But keep an eye on that one. That is a very bad indicator. The Fed does not want to see this. The Fed does not want to see labor force participation dropping. And some other things the Fed doesn't want to see is average hourly earnings increasing. And they increased again last month. Average hourly earnings year over year increased by 4.1% in December. That is a higher increase than the 4.0% number that we had in November. So average hourly earnings trending up here, 4.1% higher. Guys, it looks like average hourly earnings were falling this time, but remember, this is a rate of change. So any positive number means wages are rising. Now, wages have been rising at a slower clip right up until this month, but also keep in mind the rate of inflation has been falling even faster than the rate of wage gains. So we have actually seen real wage gains for several months in a row, and it looks like we're going to get that again this month with a 4.1% year over year increase. So workers are getting a little bit of a break here right now, as long as the layoffs and the bankruptcies don't start piling up. Right now, workers are benefiting. It doesn't seem like it. I know I'm going to catch a lot of flack for this one, but at this moment, right, forget all the changes and hardship of the last year, which you are still feeling. But at this moment, your wages are rising faster than the cost of living, at least on paper they are. So the Fed will not like to see this. They don't want to see wage gains exceeding unemployment or wage gains exceeding inflation. They'll never say that on the air, but they don't want to see that. They can't have people's lives getting easier. Oh my goodness, no. Now, month over month, again, average hourly earnings, they rose 0.4% in line with what we saw last month. So once again, average hourly earnings, the increases are exceeding the rate of inflation. Again, the Fed will not like to see this number. And last but not least, this one I'll just cover it real quick. Average work week, it did tick down by about a tenth of an hour to 34.3 hours per week worked per worker. That is down from last month, still within band of where we've been for most of 2023, but that is one to keep an eye on. Let's real quick do our Red Sea watch. Houthi drone boat detonates in the Red Sea a day after U.S. warning. This is a new tactic here that we're seeing Houthi and the Blowfish employ. A Houthi drone packed with explosive detonated in the Red Sea on Thursday, but failed to cause any damage or casualties, the U.S. Navy said, as Yemen-based group continues its attacks in defiance of international calls to stop. Remember that strongly worded letter from yesterday? It appears it did not deter our Houthi friends. This is a new one because this was a drone boat. They've used aerial drones. They've used ballistic missiles. They've used cruise missiles, speedboats full of hijackers. This is the first time we've seen an unmanned drone boat. That's a tactic that the Ukrainians have used very effectively against the Russian Navy in the Black Sea. This one didn't quite work out, though. There was some details here I wanted to share with you guys. Vice Admiral Brad Cooper, who leads U.S. naval forces in the Middle East, told reporters on Thursday that the Houthi exploding boat drove about 50 miles into the Red Sea and then detonated in dense shipping lanes. It came within a couple of miles of ships operating in the area, merchant ships and U.S. Navy ships, and all watched as it exploded, Cooper told reporters, adding that the target was not clear. I'm pretty sure what happened here is that the curvature of the earth played a role. The Houthis were probably controlling this thing by some kind of antenna from the shore. They don't have any kind of aerial relays or satellites that they can use to relay command and control data to a drone like this. So as soon as that thing got over the horizon, plus a few miles, I mean, really, when you look out on the horizon, you can see about maybe 3 miles out to sea. Assuming they were using an antenna that was a couple of feet taller than the average person, that means once this thing got about 10 miles out to sea, it probably lost contact and just kept going on a straight line until the thing finally blew up. It made that happen. So, you know, a little bit of trial and error going on here with the Houthis. Let's not stick around and wait for them to figure this out. Let's not sit there doing nothing while they learn how to shoot straight. I'm just saying, pick one, guys. Either fight or don't. Get in or get out. Don't just sit there. Also, guys, while this is all going on, check out this chart I saw on Twitter today. This is shipping rates. The black line here is showing Shanghai to Rotterdam container freight benchmark, and the purple line is showing Genoa, Shanghai to Genoa. Again, the freight benchmark. This you can see here, guys, just a vertical line straight up. This is affecting shipping rates, notably to Europe. Now, back in 2021, during the crisis at ports, it was things like Shanghai to LA that the price was going vertical in. This time around, it's affecting Europe more so than the U.S. But again, this is going to lead to higher inflation, guys. You got to keep an eye on this Red Sea story. It is important, and it could potentially escalate and cause a lot of inflation if it spreads to that other strait, the Strait of Hormuz, just to the north. Oh, and by the way, North Korea says, hold my beer. North Korea fires artillery shells towards the South's border islands. This one was last night. North Korea has fired more than 200 rounds of artillery shells off its west coast toward the South's, I'm going to butcher this, Yeonpyeong Island. Seoul's military has said South Korea ordered civilians to seek shelter on the island before holding live fire drills of its own. The South called it a provocative act, but the North denied that the islands were in danger from the drills. So, look, we've got saber rattling in North Korea. I guess Kim Jong-un is like, hey, everybody's watching the Red Sea. Everybody's watching Gaza. Everybody's watching Ukraine. What about me, guys? I've got guns, too, and I'm also a dictator, and I also create problems for everybody who was just minding their own business. So I'm going to shoot my guns into the ocean, too. Somebody get Dennis Rodman and a case of Doritos on a plane to Pyongyang before this fat little Joffrey Baratheon wannabe with stupid hair gets a few million people killed. End of rant. Good God. I was watching this last night, and I just wanted to shout to the world. Everybody just shut up and go to bed. Everybody just go to bed. Stop it. Right? What we got two proxy wars we're already fighting, 3 proxy wars we're already fighting. Anybody want a fourth? 4 wars? Fourth? 4 in the back from you with the stupid hair? Do I hear 5? Any takers for 5 wars? Good God, what are these idiots up to? Anyways, I just want to say thank you so much on a more positive note to my buddy Travis over at Real Estate Mindset. What's going on, Travis? How's it going? I hope you've got something bonkers for us this afternoon. He says, happy Friday. Thank you, Jack. Great show. Appreciate that very much. Travis, thank you, sir. Everybody check out Real Estate Mindset. He usually goes live right after I do in the morning. He's done a fantastic job documenting the changes in local real estate markets all around the country. He's been traveling to these markets and covering things right on the ground. Fantastic work, Travis. And thank you, sir, for the kind words and the support of the channel. And thank you to Mr. Thornton Mellon III. A man with no debt is a rich man. Have a great weekend. Absolutely, sir. Remember, guys, your net worth is your assets minus your liabilities. If you own a lot of cool shit, but you own a ton of money on that stuff, you are worth nothing. Maybe even worth negative, because most stuff that you buy with debt is worth less than you paid for it the second you take possession of it. So, yeah, no debt makes you a rich man. And I would add beyond that, Thornton Mellon III, thank you very much for supporting the channel, by the way. I would add that your wealth, everybody's always focused on, if I just get that promotion, if I just earn a little bit more money, I'm going to be rich. Incorrect. Your wealth is the cumulative total of the difference between what you earn and what you spend. If you only focus on what you earn, your wealth will never grow. It's the difference between what you earn and what you spend. That is what becomes your wealth over time. So even people who don't make very much money can be far wealthier than people who earn way more than them, because a lot of the people who earn way more than them, including a lot of my good friends, people I know, spend way more money than they earn. No matter how much they earn, they'll always be in debt. And those people will always be broke, always be living paycheck to paycheck. And the guy who makes a lot less than them, who is more smart with his spending and invests and buys assets that yield a return, his wealth will grow over time. So don't forget, guys, your wealth is the cumulative total of the difference between your spending and your earning. Thank you, Thornton Mellon III, for the words of wisdom. And thank you to Alex Lieberman. What's going on, Alex? He says, you're all worth nothing unless someone is willing to buy it from you. That's true. A little bit of the greater fool theory in play there. It's not worth anything unless somebody is willing to buy it from you. You got to be able to find a seller. So beware those illiquid assets, courtesy of Alex Lieberman. Thank you, sir, for the support of the channel. That's an important one to keep an eye on as well. Buying things like, Beanie Babies or what's my favorite? The Paul brothers, those idiots. What are the Pokemon cards? Nice liquid market you're investing in there if you're spending your money on Pokemon cards and Beanie Babies. So thank you very much, Alex Lieberman. Thank you, everybody, for supporting the channel. By the way, guys, go check out that video I did last night. Mr. Stephen Reese Lewis, a.k.a. Steve Harrison. Gotcha, buddy. We found out who the CEO of the crypto fraud Hyperverse was. Nobody knew who this guy was. They created a fake CEO to come promote this fraud. They stole $1.3 billion in 2022. And The Guardian just put out an article a few days ago saying this guy doesn't exist, this CEO. Nobody knows who he is. Well, that is a correct statement. Nobody knows who he is. He is Stephen Harrison, not Stephen Reese Lewis. Check out that video. Show you how I found him, who the guy is, where the guy is. Cops, go arrest him. He stole $1 billion. What are you waiting for? Thank you, everybody, for taking the time this morning to watch the Morning Update Live. I will see you guys this afternoon at 3:15 p.m. Eastern Time for my weekly wrap-up live stream. Thank you to my Patreon supporters for everything you guys do for the channel. Hi, Mom. Hi, Dad. I love you guys. Till next time, live small and dream big.